Wednesday, June 17th, 2020, Maneco 64, home of alternative economics and contrarian views. So the inflation scam continues. And by that I mean not only the way economists, politicians, and bankers define inflation, but the way they calculate inflation, the way they react to inflation, especially the central bankers. For example, this morning we've had some data out of the UK on supposed inflation. They call it CPI, Consumer Price Index. They used to calculate what they call inflation with the RPI, which is a number that comes out about 1% higher, but they got rid of that while they still calculate it, but they don't use it for all the indexing, for wages, for contracts, and for everything else. So today, the CPI came out. The first thing that you notice if you go on investing.com under the economic calendar is how complicated the numbers are. They've got the core number, they've got the CPI, they've got the RPI, they've got the core number. You don't know which one to look at unless you know about these things, unless you've worked in the system, unless you have a background in economics. And I would say the most important to look at would be the core CPI right now. And why is that? Well, because it doesn't include food and energy. Energy, we know, dropped quite a bit recently. So we want to exclude that. You can see that it's gone up by 1.2%, the core CPI year on year. That's for May. So it's still going up by 1.2%. Yes, it's below the target of 2% that the Bank of England sets for itself. But that in of itself, the 2% target, means that your money is debased by 2% every year. And I would argue it's a lot more than that. Just to give you an idea, the people that calculate these statistics, the Office of National Statistics, ONS, they're the same people that are calculating the data for this health crisis. So just to keep that in mind. And like in the US, in the UK, statisticians have used things like substitution. They've used hedonics to keep these numbers down. What does hedonics mean? Well, it means that let's say an automobile cost, let's say 15,000 pounds in 2000, and today it costs 30,000 pounds. So you'd think the price doubled, but what they do through hedonics is they say, oh, well, the car in 2000 is much more improved. It has a lot of better technology. So we actually considered that the price only went up by 10% because of the improvements. But did your wages double? No, they didn't. So all this thing about hedonics is a big scam to keep these numbers low. What is substitution? Well, substitution is when instead of, for example, 20 years ago, in the basket for CPI or IPI, they had steak as one of the foods. Well, price of steak has gone up a lot. So what they do now is they put chicken or spam, right? They substitute it. So there are loads of ways of keeping this number a lot lower than it really is. The other way they keep CPI lower, they push big corporations as well, like airlines. Have you noticed when you fly now? Well, before this crisis, of course, no one's flying right now, basically. But you always had these extra costs, like for luggage. You have to pay in some airlines for the food on the plane. You have baggage handling costs. But if you go back 20, 30 years, when you bought your airline ticket, that was it, the price. So what the government asked these big corporations to do is to basically, instead of raising the price of the whole thing, they put extra charges. And those charges are not added on to the core price of the airline ticket, for example. So that's how they keep it like that. It's a big scam, in my opinion. And why do central bankers and governments want to keep people unaware that there is inflation? And first of all, we need to know the definition of inflation, right? And I've done this many times, and I'll do it again. As Webster's dictionary from the 70s says, that inflation is an abnormal increase in the volume of money and credit, resulting in a substantial and continuing rise in the general price level. So what this phony calculation of CPI does for people's perception of inflation is that they think it's really low. It's only like 1, 2, or 3%. And they also define the prices, the CPI, as inflation. They don't look at the all the money and credit that the Bank of England has been creating, or the Fed for that matter, since the '08 crisis. And that's what's happening. And the Bank of England says as well that for its target, when the CPI gets above 1% more than the target, or if it gets above 3%, that they have to write a letter to the government telling them about that, and that they should normally raise interest rates to bring that CPI down. So I just wanted to show you this. This is from Statista.com, and you can see the CPI annual rate there from 1989 to 2019. And you'll notice that back in '08, we got up to 3.6%. Back in 2011, we were at 4.5%. Back in 2012, we were at 2.8%. Back in 2017, we were at 2.7%. But I remember very well the period in around 2011. We even got numbers, monthly annualized numbers at 5%. But just wanted to show you what the Bank of England did during that time. Well, in 2008, they cut rates, right? Instead of raising rates, even though the CPI got up to 3.6%, they cut rates. They had the chance in 2011, 2012, when the CPI was at 5%, to raise interest rates to 2-3%. So that just goes to show you that this inflation targeting CPI is a big scam, and they want to keep people fooled into thinking that there is no debasement of the currency, because they want to keep inflating the system with more money and credit. Who benefits from that? That's always a key question, of course. Cui bono, who benefits? Well, it's the bankers, because the more money and credit there is, the more profits they make. It's the politicians, of course, because the more money and easy credit there is, they can borrow more money to buy more votes. And they can also make the currency worth less, so it makes it easier for the public to carry all the debt that they create on your back. So what is the best way to look at what really is happening in terms of inflation? Well, I think the best way is just to look at the currency, and especially versus gold, but also against the reserve fiat currency, which is the dollar. So if you look at the pound since November 2007, the policy for the Bank of England and the government has been of currency debasement. We've seen sterling versus the dollar drop from around 2 to a present level of around 125. And I don't think that's over yet. And you can also see versus gold here on this chart how the fiat currency of this country, the Bank of England note, or pound if you want to call it, has been debased versus real money. Gold has been money for thousands of years. It's been the most stable store of value. So that's the way to look at how they're actually taxing you. Inflation is the most insidious tax, I would say, because very few people understand inflation. Most people think it's because prices just go up. And that's what they tell you as well. Not only the mainstream economists, they don't talk like me. They don't look at the real inflation. The politicians, the Bank of England, the mainstream media as well. I've seen headlines about inflation come out and say, oh, inflation goes up as Spanish package holidays go up or something like that, which is complete rubbish because inflation is the abnormal increase of money and credit. So, yeah, I think it's really important that people know this. This is another way that they extract wealth from the public. So what is the solution to having no inflation, real inflation? Well, the only way to do it historically is through sound money, through backing your currency with gold. Not even with 100%. I mean, in the 19th century, British pound and the banking system backed its currency like 33% with gold. And as you can see from the Bank of England data, we had minus 0.1 CPI, they call it inflation, from 1821 to 1914. But look at, ever since we went off gold because of World War I in 1914, look at what we've had in terms of CPI. It's been well over 4%. So yeah, the only way to kill inflation is to go back to sound money, but there's a very little chance that that will happen because the general public love inflation. And you might ask, what do you mean they love inflation? Well, because the only way for them to have all the freebies they have, all the welfare state, also the corporations to have all the support from the government, all the bailouts, is through inflation. You see, people don't realize that. So they want something for nothing, well, they'll get inflation. And until we educate people about inflation and what it really is, those of us who know about inflation need to keep protecting our savings with gold and silver, precious metals. For those of you who are new to this channel, and if you're interested in purchasing gold or silver, I have a couple of, one is a promo code with Gold Investments, who are arguably the oldest bullion dealer in the city of London, and the other one is for a more modern way to own gold through Glint. I have a referral code. It's below in the description of what you need to do if you're interested. I'm not advising you to do it. I'm just saying that you need to think about it. So there you go. Let's quickly look at the markets this morning. It's almost 8:45 a.m. London. Yesterday, of course, the stock market continued to go higher in the US. We saw the Dow up 526 points. And I personally think we're still topping. If you look at this weekly chart here of the Dow, I think we've made a top. And as I've said, we are in week 13. So I expect a turn very soon downwards for the stock market. I know a lot of people are going to say, oh, that's impossible. They're going to keep goosing up the markets. They're going to keep inflating the system. They're going to keep doing QE. We'll have to see. So right now, we've got spot gold actually down $3.50, is at 17.23. Range has been 17.22 to 17.29. Silver is down 3 cents at 17.42. The Dow future is up another 200 points here. Just before I started this video, I think it was up only 20. So it's just moved. I don't know why. So it's up almost another 1%. Sterling is unchanged at 125.74. We've got the euro up 0.25% at 112.90. The dollar versus the yen is unchanged at 107.35. We've got the WTI crude at 38.50. That's unchanged. Let's finish off. Let's look at the 10-year yield, US 10-year yield. Well, that's at 0.76%. That's unchanged. So there you go. Don't be fooled by what you're told about inflation, that it's low and that we're going to get deflation. Just think about how much more expensive things are today than they were 10, 15, or 25 years ago, if you're old enough to remember that. And that's the way to look at it. And also keep an eye on the currency, not only versus the dollar, but versus gold. So if you enjoyed this video, make sure you hit the like button. Share it far and wide. It helps to get the message across. And if you haven't subscribed to the channel and you enjoy my videos, think about subscribing. I wish you all a great day. Take care. Bye.